Hi there, and welcome back to PreciseAlgorithmTrading.com. It is Thursday, February 22nd, 2024, and we finally got the bounce we're looking for. Um, let's get into the markets. But we're going to start here with our automated trading systems. This is our Dow futures contracts, and we're still going up. That's great. And our results of our trading today are there. Our Russell looks like it's still on a little pullback, and the trades are there. And the NASDAQ is pulling back harder than I want it to, and the trades are there. So three losers today. But the markets in general over here, this is the S&P, and it powered higher today. The S&P gapped higher, that's a big deal, and went up 2.11%. The Dow gapped higher and went up 456 points. Sounds better than 1.18%. Still, uh, the Russell, I'm going to pull up here. I'm not going to use the RUT because it zeroes out after, I don't even know when it does that, but I'm going to use the IWM because it'll give me the results for the day today. So it went up 0.76%. And you might think that's lagging, but if you ask me, that's actually a better setup for higher prices. Um, just because we had the zigzag, we had the breakout, and now we've pulled back, and we'll see where it goes from here. There's no guarantees, but the fact that it lagged today, it's kind of like what it needs to do to get you to be like on the wrong side of that. So um, this is what the Russell looks like without being just the exchange traded fund that goes with it. It doesn't look near as good. So we'll keep an eye on it, but it is what it is. Uh, the NASDAQ went up 460 points today. That's a big number, 2.96%. And if we flip over here to the NASDAQ futures, it's interesting that it didn't hit the recent all-time highs. We have to get past this 18,121.5. We did gap here, so a pullback happens to be probably the path of least resistance. If it gaps higher going into starting tomorrow, that'll be really a bullish case for this market. That's going to be probably the thing to watch. The transports also powered higher at 1.42% today, with a gap also. It's all based on that NVIDIA earnings that we talked about last night. And oil. Oil's just coiling, doing what it needs to do. The actual USO contract here, it's doing more than coiling, but if you look at the actual CL here, that's kind of like a buildup under this price level right here. And I think we're going to get a breakout above that price level. If you actually draw it all the way back for what I'm showing here on the chart, price got rejected to the top of these candles back here. Price got rejected to the top of that candle there, and now we're at the same. You literally could draw a line across that. Let's do that. Oops, that's the wrong tool. you can draw a line here across there that encompasses that whole area, and you can see we're coiling right here. But that doesn't really show the same way on USO, which is fine. I mean, the oil futures will actually probably move faster and differently and give us a heads up to the actual USO contract. So, all right, gold, since we're here, was looking like it was going to break out, but the markets took over instead. Now it won't give me back my, there you go. Alright. There, pointer. I mean, that's still a buy signal. Just nothing to really write home about. I'm going to go ahead and put in on the hourly chart an alert above there and an alert below there, and take a look at this thing when it opens tomorrow and see if there's any kind of a trade to take. Because what I'm really looking for is a breakout above this whole area right here. We can draw a zone there, and what we're looking for is a breakthrough of that zone, because we've hit these highs before somewhat definitively in these recent moves, but they got rejected. So this is a whole supply demand zone, and what we got to find out is when we get back into it again, which one wins? Is it going to be supply or demand? And I'm looking for it to break through that zone. And you might say, why? Well, I'm going to delete that. Well, because of the trend. The trend is up. We got higher highs and higher lows. This is lower highs and lower lows, but we haven't broken down. And if the 30 period moving average decides to turn up, which it's already turned green again, that's the signal. So I'm not saying it's perfect, but we've, like, look over here on the hourly chart. We pulled up, pulled back, pulled up, gapped higher, and we've refilled that gap, not all the way, but enough for this thing to potentially move higher now. So I'm going to look at it as a potential trade. And I believe if you look at it weekly, we might actually get a, yeah, so weekly we could get a breakout of that same zone pretty easily from where it came from. We're looking for like a breakthrough of this whole area. That's a weekly area. That's a big zone. And if we get it, I think we're going to go well beyond, possibly up to 210 if you look at that, and beyond 210. From 196, that's an okay trade. And that's good enough for today. Let's look at Nvidia to see the big power move that moved the whole market. It's a big move. There's no doubt about it. 16.4% in a day is a good move. Alright, let's look at the, okay, this is something I haven't pulled up in a while. I did want to pull it up because it's the McClellan oscillators for the NASDAQ and the NYSE. I don't think there's a lot to be gleaned from here right now, but we are, looks like, moving higher in the zones. We need to get back up above the 60 level on both of these and then you're in a reversal area. The fact that this is breaking through a channel is, I mean, that's just a big bullish move. So these haven't been real useful for a while, but they are something I keep an eye on. Let's look at this. The VIX was up and it's now pulled back. However, it did end up on a bullish candle today. So it'll be interesting if we give it all back tomorrow. We won't give it all back from today's big move, but follow through from today would be literally probably where the most pain is. A bunch of people probably got short because of what this looks like, and then now they're just going to get their faces ripped off, because if you're on the right side of this market, follow this, literally this green line on the ES, on the and a lot of the other markets. You shouldn't be short, and you get your face ripped off if you're short in a bullish market. And I think that's really what's powering the move. So, and right now the futures are green. So we'll see. Tomorrow's a Friday. Anything could happen. We could give some back into the weekend, probably to be expected. And all right, let's move to stockcharts.com and look at the bullish percent indexes and get out of here. The industrials moved up 4.55%, but they're still in a column of O's. The NYA up 1.77%, still in a column of O's. The transports flipped to a new column of X's. So I was talking with somebody the other day, and they said, hey, what are you really looking for on these charts? This is kind of the thing. Well, we were in these extreme moves. We had a big extreme move down with O's. Now we've had a big extreme move back up with X's. And this is showing me that the market wants to be more bullish, because it had a giant move down with O's that created a point and figure sell signal, but in the it flew in the face of that, and everything is blowing off to the upside. So this is a place where you don't want to be short. Not everything is like coming together for a bullish or a bearish move. So you got to say, well, stocks have a bullish tendency if you put them all together, and until they all come together for a big bearish nasty move, then you got to stay bullish generally. And I hope that made sense. Stocks generally want to go up because all the indexes have to be in, all the big funds have to be in, and they have to be buying, and they don't do a lot of selling. So, and when they all start to sell, you'll see it show up in these charts. So the NDX did the same thing. I think it went out of order. The S&P up 4.79% today, but still in a column of O's, and the OEX went up 8.33%, but it's still in a column of O's. So that's where we're at right now. There's a whole lot of bullishness under the hood going on in this market, and until we see all that stuff reverse, that's just kind of where we need to stay. And until next time, have a great night, and we will catch you guys on a weekend review.